Hey, what's up? Welcome to Degen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts, like the chart behind me, which is of SoFi Technologies, ticker symbol SOFI. And so I've drawn some lines up on the chart that I think will be significant moving forward, and so I'm just going to try to break those down for you quickly so you understand where I'm coming from. And so the first thing you might notice is this white downward parallel channel that I've drawn up here, which the stock price has more or less resided within over the past 5 to 6 months. And so this is based on 3 touch points, with the first one being the high of June 14th, the second one being the high of November 3rd, and then the bottom is based on the low of October 3rd. And one of the things that I find really interesting about this channel is that on the day that I'm recording this, November 16th, the low of the day, which was $6.63, coincides with the bottom of this channel, which is coincidental. I did not intend for that to happen. And so, with that being said, if the bottom of this channel were to be respected, going from the close of the day, which you can see up there being $6.71, to the top of the channel, that represents about a 20% swing. However, the price does not always go from the bottom to the top of the channel. As you notice right here, there was a failed attempt to do that broke down right around the middle of the channel. So I suppose that would be a 10% swing, but there's also potential for the price to break above the channel. As you might notice, I have a gap drawn to the upside that was formed between August 1st and 2nd, and in order to fill that gap, the price would have to go to $10.31. However, I suspect that these gaps that I've highlighted to the downside will be filled before there is a breakout of this channel and a fill of this gap to the upside. And so I'm just going to go over those gaps with you. Just move this to the right a little bit so Ed's not in the way. And so, yeah, you can see these 2 gaps here with the bottom one, the first one that was formed between May 26th and May 30th. The high of May 26th was, I think, $5.48, so right around $5.50. So that would need to be reached in order for this gap to be filled, $5.48. And then between the following 2 days, May 30th and May 31st, another gap was formed, which had a low of $6.05. So that level would need to be reached in order for that gap to be filled. And then I'm just going to slide this over a little bit more because I extended this $6.05, $6.04 level over to the left. Going back to January 27th of 2023, the high was $6.04 before there was a gap up, trading above that level for a little while before this candle on March 9th hit a low of $6.07 before gapping down. And then on March 22nd, there was a high of $6.03, and then it looks like following that, this level between $6, $6.05 served as resistance. So I think that's a pretty significant level, and I suspect it will be revisited, but hopefully serving as support rather than resistance. Another level that I think is pretty important is based on this red trend line that I have drawn here. So I'm just going to zoom in a little bit so we can see that better. And so that is based on the low of December 6th of 2022, and then you have a number of tails of these candles that came down and pierced that level, but there were no closes below it. And so the other touch point that makes that trend line is based on the low of May 2nd, and then you have these other candles, these tails, trading around that level. And one thing that stands out to me is that on May 15th, you have this candle that went below that red line. However, the close was above it. So there has yet to be a close below this red trend line that I've drawn. So I suspect that will be pretty significant moving forward. And then coming back to looking at the future, let's look at the future and considering this trend line and the bottom of this channel that I have drawn here. I have these gaps shaded in blue, and I just extended them to the beginning of the year, so January 1st, and that happens to coincide with the intersection of the bottom of the channel and this upper gap. So if the price action continues to reside within this channel, this gap could be filled, as could this bottom gap. And the red trend line that I have drawn, happens to coincide with not only the bottom of the channel, but also the top of this lower gap. So I suspect that price action may continue to reside within this channel moving forward until these gaps are filled and this red trend line is revisited, which I suspect will be respected before breaking out of this channel and then moving higher to $10.31 and above to fill that gap. And so those are my thoughts on SoFi. If you found this video to be helpful, make sure you like it. Let me know your thoughts in the comments below and subscribe to the channel for more content like this. Thanks a lot for watching and happy trading.